everyone, welcome to Just Invest Today. And today we're talking about Etsy. Yes, I sold off some of my Etsy. I sold off a 30% of my Etsy holdings. But before we get into that, we have to kind of understand why I did it and just the reasoning in my head. Even though it might not be good reasoning, I still want to get into it. And before that, you have to understand reasons why you're selling a stock or reason why you would sell a stock. So really also get into that in this video. So let's start by saying the reasons for selling a stock. There's probably around like 3 strong reasons why you would sell a stock, maybe more. But for me, we always have to think about it in the long-term sense, right? So the first reason why you would probably sell a stock is because the thesis is not going the way you thought about it or the way you kind of had in your mind about the story and where the stock was going to go, and it's not going in that direction. It might be due to like management, might be due to the products that they're presenting, it might be due to whatever, some supply chain stuff, who knows. There's so many ways your thesis can get destroyed or the story of your company can get destroyed. And that's an amazing reason why to sell your stock. It doesn't matter if it had a 50% loss, 40%, or maybe it's up 50%. It doesn't matter. You have to sell your stock if you really do not believe in the company. So that's a good reason to sell. The second reason to sell is maybe you have a better opportunity somewhere else. And this can always be tricky because sometimes you may think that opportunity is better, it's more undervalued, but the stock that you own and that you know is probably, and sometimes usually, the better bet because you just know everything about the company, the ins and outs of the company. You just know it's gonna still do good, but you still looking at that shiny object saying, oh, this stock might be better because it looks more undervalued. So that's another reason why you could possibly sell your stock because you find something more undervalued and you don't have a lot of money in your account. So you got to sell off of that and get this, right? So that's another reason why you're going to sell. A third reason why you might sell is because the company that you're seeing, maybe you've held it for 4, 5, 6, 7 years and the returns are not the same. It's not doing the exact same things it used to be doing. They're not reinvesting the money at the same high pace that you're used to. So it might be becoming a mature company. So maybe you're just like, man, I don't really like this company. I don't really want this company. Maybe I can sell it off and get something better. Kind of almost the same thing. So that might be a reason why. And another reason why, in my view, and this is because I'm seeing Etsy right now selling at like a 60 PE, even though it's selling around a 66, 60 around that price PE, doesn't mean it's overvalued. But in my estimates, Etsy was like around, I had an intrinsic value at like 230. I bought it like 160. So it's already had like a 48, 49% run in like no time, like around like 2 months or so. So I made a killing in that short period of time. In my mind, I'm just thinking like it's getting to that intrinsic valued, almost overvalued territory. Because if it shoots up another, what, 15, 20%, it's going to be overvalued at that point. But even when you're listening to people like Warren Buffett, like Charlie Munger, that's not a good reason to sell just because it's overvalued in their new model because they can't just rearrange money so fast. They can't sell in and out of stocks like they used to, like it's 1960s, 1950s, and that's what they used to do. When it reached intrinsic value, they used to just sell it off, buy something better. But now they can't really do that, right? So they have these amazing companies, even if it gets overvalued, they just hold it. They don't care. They don't listen to anything. And that's always a positive viewpoint to have because you don't have to pay taxes. You don't have to like listen to anyone and you're not doing all these transaction fees. And it's really good for them because they have so much money. They can't move around all those billions of dollars so easily. But in my point of view right now, I'm still young. I don't have as much money as Warren Buffett or Charlie Munger, right? So I can actually do stuff that they were doing in the 1960s. So I have a portion of my portfolio that I like to kind of move around a little bit. And then I have another portion that are kind of more, they are long term. Like every stock I own is a long term hold. But if they don't reach intrinsic value or they're not like very, very overvalued, I'm gonna keep them. But Etsy right now, I feel like it's getting to that overvalued state. It's kind of reaching there already. And I already had a 48% run up. So what I'm looking to do is just sell off portions, have that money there when I find a better opportunity and once a better opportunity comes. Because even if Etsy stock dips, I'm gonna buy right back into it. If it gets back to like the 150s, 140s after earnings or whatever happens, I'm gonna buy right back into that because I still believe in the company. I still like it. So that's not an issue for me. But I wanna get some of that 1916's Warren Buffett investment strategy when he was making 30% a year. When companies were getting to intrinsic value, overvalue, he would sell out, he would buy stuff cheaper. And that's where he made a crazy amount of money, man. So I'm having that like mindset kind of going in. I have the Charlie Munger mindset of buying, holding these strong companies for a long term because Warren Buffett always says, why would you buy an amazing company like Apple and Coke? Say you actually really owned Apple, you really owned the business of Coke, and the company becomes overvalued. You would, if that was your baby, if you really owned that company, because you got to think of these businesses like it's actually your business, you would never sell that to anyone asking for whatever price they're asking for. Even if it's like 5 billion over the price, you wouldn't sell it because you understand how strong that company is, no matter what price they're giving you, if it was an actual business that you owned and loved. So that's how they think about these stocks, these businesses. But in my point of view, I want that kind of 1960s Warren Buffett feel, have a little bit of that in my portfolio, as well as that long-term holding period. So I'm trying to get kind of both angles right there because I'm selling off businesses, getting lower businesses, seeing that reach intrinsic value, maybe sell some of that off and get back in. That is a lot of activity, but I'm willing to have a little bit of activity here with my long-term holds like Alibaba, like Facebook. I still, Facebook is so undervalued. Alibaba is so undervalued. I can see myself holding those for 5 years without selling anything because they're so undervalued and the prospect for growth is really good. So even though I sold Etsy, I still believe in the company. It's still gonna have a huge run up, and I'm just selling it because I feel like there's gonna be future opportunities and there's going to be future stocks to buy. So that's my reason for selling. It might not be the best, but this is what I'm doing. This is how I feel confident, and this is what's been proving me so good so far, man. I had a crazy run like last year in March. I had like a 48% return just getting in and out of stocks. Kind of, I've been had alts I sold off. I sold off of Skechers, Foot Locker, all those crazy stocks that I had huge runs, I sold off and I bought into cheaper companies. So it's been doing good so far, and I'm just gonna continue that spree on some companies. So guys, tell me what you think about the strategy. If you like this video, please subscribe to my channel. I'm gonna get back to you in the next video. Peace.